Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.
Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, David Shapiro from Sasfin Securities, Graeme Körner from Körner Perspective. Be sure to send your questions, email stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV using hashtag Stockwatch. Gents, thanks for the time today. I'm going to start with the easy question I got on my Twitters earlier today. Graeme, we'll start with you. Gold, I totally missed the bus. Is it too late? So we're just asking you to project gold prices forward by, I don't know, a year or so. What are you doing? Gold now trading all-time highs. Buyer, seller, holder?
Look, I'm not a natural gold bull. I think there are seasons to be in it, and clearly the last 7-8 months was it. For me, it's inherently speculative. I would say, for 9 out of 10 years, you probably don't want to hold it, but in years like this, you really want to hold it. My sense is the easy money has very much been made. I mean, obviously, there's a bit of a crisis around. You've seen governments, unsurprisingly issuing lots of debt, and for me, going far too short duration in those bond raises. So I think there's a little bit of a crisis of confidence in currencies, and some fears around debasing effects. So that you can understand it makes the argument, but no, I wouldn't be a buyer of gold stocks now, or gold. If you look at it, really, the rand gold price hasn't done very much because the rand has obviously fought its way back. So it's a long way of saying I have no idea, but I think you've kind of missed the bus.
David, are you jumping on this bus? Are you jumping off? Or are you wishing we had Wayne McCurry to channel our resources pool?
Yeah, I was never on it. And even if I knew what was going to happen, I wouldn't have got on that bus as well. And I think there's a clue as well as to the exhaustion that we're seeing in gold. Eventually, these assets have got to return something. And suddenly the platinum price goes up from 1,000 to 1,400, which is also very speculative. Forget about the shortages and other arguments. And now silver's over 40. However they manage it. So you can see the massive amount of speculation going into those metals. And somewhere along the line, you get a bit of exhaustion. And I think we're going to reach that level. But I'm not going to tell anybody to get off yet.
Okay.
But it's a difficult, it's always a difficult area to get involved with. Mm.
Yeah, I mean,
if I may add.
Yeah,
sorry,
Graeme?
Simon. If I may add something. I think, we spoke a little while ago, couple of months ago, and we were saying, I'm warming on the PGMs because capacity has been coming offline and a small shift in demand, because I think gold is very much driven by sentiment, but I think platinum has more fundamental value. So, if you're sort of deeply regretful of having missed the gold bus, I think there's better fundamentals in platinum, in things like Valterra, where you've seen that thing spike massively today, that I would rather play there. I think to David's point, probably a little bit of the strength is also just sort of the alternative currency kind of thing in the PGMs. But I'm becoming more optimistic on the outlook for PGMs just on a fundamental basis, given changes in supply and demand.
Yeah, and Valterra is having a great day. Graeme, I want to stay with you quickly. You said central banks in the short end. I'm assuming you're meaning that when they're issuing their debt, which they're doing globally on a regular basis, they're sort of doing more, 1, 2, 5 year rather than 10, 20, 30. What's the concern with that?
So my concern is you have to keep. Okay, so the basic thing is governments are borrowing long. Yeah,
sure.
They're looking at funding for an extended period of time. So let's say you've got $40 trillion worth of debt. If you sort of say, well, you know what, we don't want to issue bonds at 10, 20, 30 years. We want to issue 1, 3, 5 years. The problem is you're constantly coming back to the market, and that's where you saw the little bit of a wobble, in the UK. Courtesy of sort of telephone numbers. So for me, it just makes sense to spread that duration around, have some long dated stuff. If on the long term you end up paying slightly more for it, it's just sensible. But this strategy of, and you've seen it over years. You can see the US's debt profile. It's really shrunk quite significantly. And then if you have a little bit of a crisis because you're flooding the market, and let's also remember that, in spite of all the promises, the deficits remain. So, they're borrowing naturally, and now they're having to roll. So I think it just lends itself to, let's call it a bit more of a crisis. So just fund it as it should be long term. Yeah.
Keep it long, and as you say, you pay a bit more, but you don't have that challenge. David, Cashbuild results out today. I would not want to be someone selling DIY to South African consumers right now. Thoughts on the numbers? Thoughts on the prospect for the stock?
Yeah, I've always liked this business because of their transparency, and also they're always honest about where they are. And they've had issues. I watch it very carefully as an indicator of where things are in the country, particularly because they supply the bucky builders. And I think any drive into the country, you see these, you'll see a Cashbuild store, which is nothing more than a room with a lot of window frames in and cement bags and so on. And they've battled, and they battle for valid reasons, because nothing is really happening down below, at those kind of levels. There's a slight improvement now, but they still highlight how difficult things are. I watch it carefully, because I think when things do turn, yes, this can run, but there's no proof of this happening yet. No, nothing there. So I like to read their numbers. I remember old Pat Goldrick. He was a wonderful person to have, and very honest and open about where things are. But we're not in Pat's days at the moment.
We're not. I mean, Graeme, it is. They're honest with what they got. I like the management. It's a tough space. Your read on Cashbuild?
Yeah, I think your introductory question was probably exactly right. That this is not the environment you want to be trying to sell into very, very stretched consumers. I actually thought, quite frankly, and we did see it a while ago, a bit of a rally, courtesy of the two-pot system, but that seems to have sort of fizzled out. So very difficult. You look at the other bigger listed groups, they also have, if you look at and unlisted in the form of Massmart with their Builders Warehouse. So it is a very competitive space. I think Cashbuild's a very, very well-run business, but it really is a difficult industry to be in. And it's reflected in the share price. But I must confess I haven't had a chance to look at the numbers yet. But I think it's one of those that eventually the sun will shine, because people will need to do extensions. They will need to replace bathrooms and things like that. And it's one of those that will, when the sun rises again on South Africa Inc., which doesn't seem that the market is seeing that as being likely soon, this company could do supremely well. So it really is priced for a doomsday scenario, and I think it's a quality business.
Yeah, absolutely. And one day Cashbuild will be great again, but they need some help from their economy. Graeme, next day with you. This question was particularly for you. Came in. Please ask Sir Graeme. His words, not mine. EPE Capital Partners. He's liked it. I hold it. Does he still like the unbundling value return story? Graeme, EPE Capital Partners.
Yeah, it's been in the last while, although from the listing, it hasn't been a value creator. But if you look over the last year or so, it's almost exactly a year since Break was unbundled. That's done well. If you'd followed rights, you would have done even better. So if you look at it, Optasia is still the asset. Optasia is looking at doing a listing. I thought, just go to the NASDAQ. You don't need to come to South Africa. So I get the sense that there's not a hell of a lot in the waiting lounge to be sold in the very short term, but there's some assets in there that I find really, really compelling, and Optasia, I think, is one of them. I think if they were to list Optasia and distribute those, I'd be very, very happy. So I think the board has resolved, basically wind up this portfolio and either distribute the assets to shareholders, hopefully what they do in Optasia, or sell them off and return. But it's still trading at a chunky discount. If you look at their history, and I'm not just talking about, Ethos/Rohatyn Group, but even Brait, their history of selling at above book value is very, very solid. So I think there's a very real chance that you get that, and even things like NTN have probably come to the party a little bit for them. So I believe that it's kind of like the battle lines have been drawn at 650. It just doesn't move through there. Seems to be a bit of a seller, but it unfortunately is not a growth asset. You're really just looking at stripping a little bit more than the current NAV out of it. But I think the assets are good, and they've got a plan on how they're going to return it. So if you've got it, you can hold it. If you don't hold it and you think this could be a cheap entry into Optasia, I think there's a lot of merit in that argument as well.
Yeah, so the particular question, Oscar, got it earlier in the year. I think you'd mentioned it. They'd done their homework and they say they're up some 30%, so not complaining. David, EPE Capital Partners, any deep insight? You were furrowing your brow.
That's what I love about Mr. Körner. He
I know.
knows these language, and you can always rely on him to give you an in-depth analysis of EPE, which I only know from the Crystal Challenges Closes EPE. Apart and its ethos, but that's about it.
Okay, no, that's fine.
It's about 1.6 billion, I think, in total market cap. So.
Yeah.
And Mr. Körner probably owns all of those shares as well.
No, but that's it. We only need one smart person on the show, and today it is Graeme. So David, I'm going to stay with you. Last week you picked Nvidia ahead of the results. The results weren't bad. The forward guidance, I don't know. The market seems a little. And what are your thoughts, Nvidia?
I still like the business. I don't listen to analysts. I like to go straight to Mr. Wang himself and to get insights from him. And whichever way we look at it, this is not going to fall over 1 year's time, 2 years' time, 3 years' time. It's going to continue for some time now. The manufacture of these fancy or really high-level semiconductors. Whether he can stay ahead of the competition is up to management, and whether he's got the skills to do it. But the demand will be there. So the pressure is on him to maintain his dominance in an area which I still think has got a lot of room to grow. The analysts and media and that are always going to attack it and saying, this is never going to fulfill its promises and so on. We've been through that many times before. But the more I read into what's happening in AI, the more I'm encouraged by the spend that's going to have to take place. So it's going to be patchy from time to time, but still. So it's up to him. I thought the results were superb, but it's the kind of beating stock. It's a stock that everybody likes to beat. As soon as thing goes down, as soon as things are a little rough, they sell.
Yeah, everyone doesn't like it.
Then they go buy it and so on.
And he did say,
I still like it, yeah.
He said, what did he say? $2 to $3 trillion of annual demand by, I forget, the numbers were staggering. But Graeme, Discovery trading update came out today, and market is loving it, and the bank is profitable. And I've said this before on this show, the insurance, long-term insurance always hurts my head when I try and read the results, more so with Discovery. Do you have any deep insights and thoughts and valuations at Discovery now, 225, 230?
Well, other than the fact that we finally sold out of them at sort of 185. So I think the results are good. I agree with you. You need to be a special human being. In fact, you probably need to be superhuman to understand their financials. I still have the sense that the life insurance business just generates too much of the profit. It's the engine room. And I think that will change over time. I think the competitive landscape in terms of, using the behavior, to reward and to cross-sell, I think those opportunities might be narrowing a little bit. But clearly, they're in a purple patch right now. But I wouldn't have sold them if I hadn't gone lukewarm on them. I'm sort of worrying increasingly about the cross-sell opportunity. And as I say, that core business, which is life insurance, which has just been too big in their world, I'd like to see the other businesses really, really kick into gear more meaningfully. So, but clearly I'm just angry. Just joking. Because we backed it for a long time, and then kind of changed the view based on. Also, it took the bank a very, very long time to actually turn profitable, and I still believe it's got a very narrow offering. So, for me, it's around the completeness of the offering and and keeping people in that on that hamster wheel, I think, is going to become increasingly difficult.
Yeah, well, so to alleviate some of your pain, I sold at 160, saw it go sub 120, thought I was a genius, and here we sit. David, Discovery, I mean, they're a big challenge. As Graeme says, it's a lot into the life policies, but it's also a market that isn't growing. I mean, much like Cashbuild, they've got to steal from somebody else.
Simon, if we look at the trading update today, and I've been lukewarm on them forever. I don't own them, I haven't owned them for clients, but I watch them very carefully. But if you look at today's numbers, the growth is in the UK, and I'm talking about huge growth. They talk about 170% up there, and a lot of that is people moving out of the NHS, National Health Service, into private medical aid, so on. And of course, their model is once they've got you as a medical aid member, so they start to sell you the other insurance products, etc. I'm not a great vitality person, the reward type system, points and so on. I don't measure us on that. But I'm saying this, what's happening in the UK is a big turnaround. Can they sustain it will be whether or not this company can continue to grow. Because if you do the numbers, and I've done them very roughly, 36% of the profit now is now out of the UK. So that's a big number. It used to be 10 or 12. So we've got to look into that in a lot more depth. What happened? Is it a change of management? What is it there that has changed on the landscape that can produce these kind of numbers? So from that point of view, it could be, they could finally have broken out of South Africa and getting growth elsewhere.
Yeah, the UK, look, they're making money there. It's a wild market. Not maybe the best market, but let's move to retailers.
It's bigger than, if you translate their vitality there, I wrote down the number now, it's bigger than Life Here.
Wow.
Generates more profit there. But we've got to get the proper numbers. This is very much, just on a piece of paper in front of me,
Yeah. So David, let's go to Woolies results now under 50 Rand a share. Was it 140 at one point? I mean, it's just been the litany of disaster. It was Australia. Then they sort of moved away from Australia. Now it's clothing. I mean, is there hope for Woolies? Those numbers were not pretty this morning.
When I looked at ShopRite's results, you just see a company that is kind of surging forward, just knocking everybody out the park. I still prefer nectarines from Woolworths to those nectarines that you get at ShopRite.
Agreed.
But still, when it comes to other offerings, they're battling along. There are small improvements here, but Australia's just taking them down as well. And I visit Australia all the time. Country Road hasn't changed 10 years, same offering. You can still see, you walk in there and it just looks like it did a long time ago. They've got to do a lot to improve and Simon, Australia is a massive fashion place.
Yeah.
It's a leader, it's a wonderful place, and yet they haven't really got it right. And of course, David Jones took them down. So those results are scary. Yeah, they're really scary.
And it has actually recovered from below 50. It's now above 50, but still having a rough set of numbers. Graeme, Woolies, I mean, this used to be, for a long time, Woolies was awesome. They had return on equities in the mid-40s and the like. And then they went to Australia, and it's all just wheels off. Is there hope for this one, or do we wait for the wheels to get refastened first?
Yeah, I think to your point, there's kind of, to me, there's three businesses in one in Woolies. You've got a really good food business, but it too is facing competition, as David was saying. ShopRite, I think they're literally eating their lunch. And then you've got a South African, let's call it beauty and fashion business, and then you've got, Country Road. So I think to your point, Country Road operates in a really difficult market. And you've seen some of the other South African retailers and just how difficult their UK or Aussie operations are. So I think if it was simply a South Africa business, I would say, it looks okay. I think, the base might be forming. I think there were a couple of positives coming out of it. You can see online's doing well. Food, I think revenue was and profits were up 11%. I think South African fashion and beauty and health not doing that particularly well. Yeah, but it's like David Jones all over again. Country Road just is the Achilles heel. So I I think it's almost a question of how much damage is this thing still going to do. This is obviously a legacy issue. But, Simon, when I look at a business like Foschini Group, for example, and I mean, we have to say in context, all the South African retailers have had a difficult time. I'm excluding ShopRite because it's obviously very much food. But if you look at the Foschini Group, which I think is a really well-run business trading just over 100 Rand, I would much rather own that. And if you like the food story, you can go and buy ShopRite, for example. Yeah. So I think Woolies is a little bit like Pick n Pay. They need to reinvent themselves, face their demons. So if you haven't got it, I wouldn't be buying it now. I think there's still work to do. And I do think that in spite of the good work in Dash and everything else, I think it's going to be a very, very competitive world. And you can't rely on that food business to bail them out.
Yeah, and I was going to say you could take your 50 Rand for a bag of Chuckles, but no, you'd get half a bag of Chuckles and it would probably be a small bag. Graeme, next day with you before we head to stock picks. Sun International question coming through. I'm liking it. I'm holding it. Does the panel agree there's still potential? Surely we'll get some foreigners coming out to our beautiful and cheap country. Sun International, and they've got the hotel part. They've also got the betting side, which are probably doing quite well for them as well. Graeme, Sun International?
Yeah, so Sun International is very much a gaming business. The resorts in that are very much a secondary part to that. It's looking a whole lot better. I would say, we had a pretty good look at it quite a while ago and results. Yeah, this is one that we probably should add and got a little bit sticky about the level we wanted to buy it at. It never got there. But I think it's a better business. And I think the gaming business will probably continue to do well, although even there, it's competitive. But, the share price, I think, is telling you something. It's in spite of a fairly difficult consumer environment, I think they're trading very well.
David, we need to go to stock picks, but in half a minute, Sun International, yay, nay?
Yes, and simply when I looked at Bidvest results, the one positive thing that you can take out was that the hospitality side, or the travel side was increasing, which is a clue into what's going to happen, air travel, more people coming here. Exactly for that reason. Yeah.
So let's go to stock picks. David, Rheinmetall, which I know what it is. It's German. It's defense and the likes. Your pick.
They make ammunition. They make all the hard stuff that was on show yesterday with Xi when he had that parade, accompanied by little Kim, the Rocket Man, and Mr. Putin. And all I'm saying is that when you looked at that parade, I think every European country is going to get envious. And NATO is putting pressure on them to increase their arms and defense and defense systems and so on. And I think it's real. I think the spend that we're going to see coming out of Europe, starting with Germany, is going to push up Rheinmetall up, pretty well. Listen, this is a company that's, it's up 190% already this year. But believe it or not, there is upside. So if you like companies that make bang bangs, well, this is the one.
They make proper bang bangs, not like the ACR type of bang bangs. Graeme, your stock pick, and you were saying before we came on, you wanted to rebut David before you had a 5-cent thought in your pick.
Yeah, so firstly, I mean, if the thought of investing in an arms manufacturer, rattles your nerves, then my offshore pick is Universal Music Group. They'll give you the music, got a great collection of artists and a beautiful catalog. It's the kind of business you just don't get here. So a massive moat. Obviously, digital music and streaming has changed the nature of it, but I think Universal Music Group is a very, very well-placed business. And then locally, when I look at ABSA in the 180 Rand mark, it's going to deliver, about $29 worth of earnings, dividend yield is 7%. It almost feels offensive. So I think your margin of safety is very, very big there.
We'll leave it there. That's our stock watch for today. Thanks to our guests, David Shapiro, Sasfin Securities. Rheinmetall is what he went with. Graeme Körner from Körner Perspective. Universal Music, but he gave you 2 stock picks. The next other one was, of course, ABSA. Up next, the close. Stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.